I get very confused when people say I'm thinking of starting something, because I don't understand how you think. Startup is such a stupid idea. If you think, you will never do it. I mean, if you think logically, you should never do it. But no, interestingly, India is nothing more than a chiller market. It doesn't matter where you start from, because India has this radioactive half-life theory on spreads. So if you are making 100 basis point spreads on the first year, and next year you'll make only 50. And third year you'll make 25. Fourth year you'll make 12.5. And fifth year, that guy will tell you, you pay me for giving you the business. Right? Every one of us is a friction point. We don't realize it. We are a friction point. Now we can say we are enablers. Our tech makes it much more easier. Blah blah blah.
Wow, that's
nonsense.
That's so.
All intermediaries. The question really I had in Vayana when we started off is that, do we want to be a visible intermediary or an invisible intermediary?
So on this week's episode, we talked to Ram Iyer, the founder and CEO of Vayana. After 3 successful startups, Ram is now building India's largest B2B credit trade network. Vayana facilitated over $30 billion in trade financing. They cover thousands of supply chains and operate in 20 plus countries across 25 industries. Join us as we talk to Ram about his inspiring journey. Hello, everyone, and welcome, Ram, to Founders Unfiltered. Great to have you here.
Hey, same here, Mazin. Great to be on this podcast.
So, Ram, let's jump into it. Let's start off with the rapid fire round. If you could be a professional in any other field unrelated to your current work, what would it be and why?
2 things interest me, which I'm not good at, but I would love to be a music critic. I don't know why. I don't sing. I'm tone deaf, but I would have liked to be a music critic, I guess. And second, I guess, is Zen coach. Yeah, a lot of my friends and colleagues have become executive coaches and all. I love this idea of spending time with others and giving some advice. God only knows what it is, but I like that word, Zen coach. I think that it always appeals.
Zen coach. Okay, that's a new one. I've not heard that before. So it's helping executives keep mental balance. I guess that's different. And so, what's on your bucket list?
I would love to travel. Yeah, I have. This is a very interesting thing. You said you're from Bangkok, right? So I have actually traveled 36 times to Bangkok in my and I haven't seen it once. I've only been in the people and gone to the meetings. So yeah, almost every place that I've gone in, I think I've gone to many places. I haven't seen any of them actually as a tourist, I guess. So I guess one definite on the bucket list is to go as a tourist, which I've done to about a couple of places, but not too many. I think that's one. And 2 is not to have a mobile with me.
Completely disconnect
now, but I would love to avoid the mobile totally.
So one question you'd ask yourself if you were the host of this show. So this is kind of a lazy question we ask everyone, and then I'll ask it back to you. But what would you want the host?
I have anything better to do on a Sunday. Yeah, but I guess one question that always strikes me is it should get asked to, I think, all founders especially, is, do you think you are fit for the role that you currently are on? I think it's a very important question to ask, which I don't think many people ask. We obviously start a company, we become the CEO or whatever it is, something we become. And 10 years later, we're successful. Somebody assumes that we just have a right to be there. I think it's just a question to ask. That could be one of your rapid fire, questions which you, spring on founders.
No, that's a good one. Yeah. I will definitely ask you. We'll come back to that. But continue the rapid fire. On to the business questions. Bootstrapped versus funded?
Bootstrapped.
Why is that? Why bootstrapped?
I think it gives you a lot more. If you're building a company, right? If you're building a business, I think it gives you a lot more ability to kind of shape the company that you want. I think where the funded one, you can get great investors like we do, and you have the ability to do that. But I would still think bootstrap gives you a lot more options to, first of all, worry about your business profitability right from day one. It gets you really focused on that. And second, I think it makes you also, and it gives you a tremendous ability to shape it up the way you want. And I think that's a very, very important thing for at least a founder.
Oh, that's good advice. I think nowadays, of course, a lot more focus on profitability. What's one of the most valuable lessons that you've learned from failure as an entrepreneur?
Many, but I think the most important thing is don't throw the baby with the bathwater. Very often you kind of, let's say that you decided to expand internationally and it failed. So the next time as an entrepreneur, you decide never to expand internationally. That's stupid. You make a few expensive hires and they don't work out. And then you say, look, I'm not going to get somebody expensive. Again, doesn't make sense. So I think the key thing is to understand really why it failed. and then steer clear of that, but not kind of go whole hog and take a very philosophical approach and say the whole thing is bad. So I think I mean, to me that has been the most important thing. I've always had to keep that in mind when I decide not to do something. I just want to make sure it's for the I've thought it through.
The right reasons.
Yeah.
What's one truth that few people agree with you on?
I mean, just in my field, I
Given
would
to
say
us.
credit should never ever be frictionless. I keep saying this every time, and I get
Okay.
scared when someone uses the term frictionless credit. Um, uh, I like BNPL to me has always been die now, pay later. Um, uh,
Yeah.
yeah, so a bunch of things. Or HR is required in a company, which is always a very dangerous thing to say. But I am not a big believer of HR. Or company is a family, which is complete
Wow.
cringe. But lots of stuff. I mean, yeah,
Quite a
I think,
few. Would love to love to jump into some of those. So let's start at the beginning, right? Let's hear about your journey right from the start. Where did you grow up? Where did you go to school?
I grew up in Mumbai. So South Indian family, grew up in Chembur, which is I think one of the big epicenters of South Indians in Bombay. Went to school there, small little school there, and then did my engineering also from Bombay. My till I went to Ahmedabad for my MBA. I guess that was the first time I was out of Mumbai in that sense.
Okay.
Had a bunch of very interesting accidents along the way. I mean, MBA was not on my list. In fact, I didn't even know what an MBA was, honestly speaking. I mean, till I got kind of asked by friends to join in and apply, and then got in. And then when I got in, I didn't want to go because in my family, generally, I think engineering itself was a compromise with pure science, and then MBA would have been
Okay.
absolute best for me. So I must have been the most depressed guy on the campus, I think, for a long time.
Walk us through that. So you just went because you got it. And then,
No, no, actually, a series of accidents happened. I didn't know I wasn't going for the interview when some boss of mine, I was doing an internship in a company, forced me to go there. In fact, he gave me his shirt, tie, loaned me so that I could go a little presentable. So I went in there, and once I got in, I was absolutely sure I didn't. So I came actually to Pune to join Tata Motors. After my
okay.
engineering that place, I rented a place and all that, and I thought nobody would know about this, that I had ever even applied and gotten or something like that. And somebody told some prof of mine, and he then came down to Pune. I mean, bless his soul. And he came down and took me to Ahmedabad to say that you got a bit
You
tougher.
have to give this a shot.
Yeah, he took me there, and so I mean, look, and it took me about 6 months to figure out, should I even be there? It was not really my interest area. I mean, I was very much into industrial engineering and stuff like that, some strange stuff, but it took me some time. It was a great 2 years. I mean, it was great 2 years in retrospect, and even when I was there, great set of friends, all that. But it took me some time to kind of get used to the idea that I would be a snake oil pusher or something like that, which is what my general thought process on MBA was. So anyway, after MBA, I got into again. I did a pretty weird thing. The bunch of companies, day one, day two, day three, all the standard stuff. But there was a
Right.
consulting firm that came with a guy in Bermuda shorts to interview us.
Okay.
That was really cool.
And you're
So,
like, that's where I want to work.
yeah, that's what I want to work. And he had a very strange question to me. He asked me what was my rank, which was somewhere in the south of wherever it should be. And
Okay.
then he said, "Oh, why did you even attempt this much? Why didn't you go even lower?" And and I said that was a very interesting take. I said, "No, this is definitely a place I want to be in." So I spent 3 years in a consulting firm. It used to be called Anderson Consulting, then got renamed as Accenture. But it was a really good
Mhm.
time. I mean, I think whatever I am today, I think a lot of it goes to credit to them because I think they did multiple things. I mean, I got used to the idea of lecturing on people on stuff I had no clue about. Um, which is nothing
Yes,
always
as
a
it
great thing to have. And second is, I think they sent me to Stockholm and during winter for about quite a long time for a project. And that's a great place because 23 hours of no sun, you kind of introspect a lot. So and I had my first, I think, fight with HR there, and that kind of that's one play thing that I got scarred for life. I think in HR. And then that made me kind of get out and say I'm going to do something on my own. And I think that's what set me off on the whole, what's now called entrepreneurship. That time it was called going in business, which was kind of a bad word, South Indian circle.
right. So I mean, just to kind of set the context, what is the time frame here, like around
Oh,
which
I'm
year are we
old.
talking
I'm
about?
ancient. Mazin, I'm
No, no,
ancient.
no. No, but
I
you,
did my B school in
for our
91.
listeners,
So this is 91 to 94. So Valentine's
that you
Day,
were Accenture.
yeah. And so Valentine's Day 94, I got out of Accenture, walked from Cuff Parade to VT, if you're familiar with that space.
Yes,
Called,
of course. Yeah.
called up a friend of mine and said, look, I'm bored. What about you? And he said, he's bored. And then we got together at his place and started a company in the evening.
You see this the same day, the same day.
Yeah, same
Walk
day.
us through that process. Did you just quit without knowing what you're going to do? Like, or you had an idea that you're going to talk to this guy and yeah.
Oh, I don't think there was too much thought. In fact, that's what always I get very confused when people say I'm thinking of starting something because I don't understand how you can think. I mean, startup is such a stupid idea. If you think, you will never do it. I mean, if you think logically, you should never do it. But I didn't think. Look, I had a couple of factors that happened on the way. 93 end, I was actually thinking of quitting my consulting firm and I was looking at options. Somebody directed me to this small company then in Koramangala in Bangalore. I went and visited them, met all the founders, and I really was struck by their enthusiasm. The way that
Okay.
they were very passionate about what they were doing. It was IT services. It was a company called Infosys back in '93,
Right.
and very kind. They really kind of tried to place me in Infosys, despite I don't think I was very competent at that time to join that firm. And then, so that happened. And I think somewhere along the back of my head, it was like, oh, this is an interesting idea being on your own, And I think something else happened. I used to be one of those typical people you find in offices, a smart aleck who has a funny thing to say about everybody and grumble about everybody. And I think one friend of
Okay.
mine once asked me, don't you get tired of whining about others and, blaming others? And that struck me as a very, very I don't know why. It just struck me as a profound thought, and I thought, so when this idea of business came in, I really thought it's a great idea, right? You can't blame anybody for this. It's a very liberating feeling. I thought that everything you can kind of do. So I think those are the things. But I honestly cannot say that when I got out on February 14th and did that walk, it was really about going and starting something. I just called up this guy, and for some, interestingly at that point he was also kind of wanting to quit his job, and we just started. And our idea really was nothing in this what I'm doing today. It was about making point of sale marketing material. That guy was
Okay.
an product, a double postgraduate in industrial design from IDC and IIT, and then in SUNY Buffalo, and he had some really great ideas, and he was a great creating guy even now. And we thought we would make some point of sale marketing material for FMCG companies. That was the original idea. I don't know where it popped up from, but that's what it came. And by the way, the company's name was also very interesting. It was called SNR, and it
SNR. Okay.
was for simple solutions to real problems. Don't ask me what it meant, but and this was done by another friend of ours
Right.
who popped in and when we were discussing this, and we asked him what should be the name of the company, and he said SNR. Which also, by the way, a lot of people took stock for the initials. I was Ramaswamy and the other guy was Swapnesh, so they thought it was S.
Oh, so it worked out that way as well.
It's
Nice.
not that way. A lot of people thought that, but that is not the way it came in. Actually, this came in because of the simple solutions for real problems. But anyway, so we started off there. Then we got into doing with NFDC, a multimedia CD of anthology of Indian cinema, which Mr. Amitabh Bachchan inaugurated. That was my brush with fame, or only brush with fame.
Okay.
That was an interesting one. And then that was my second. But 2015, I really wanted to get back to Vayana. By then, we had a very large institutional investor who came in, and I really said, okay, now this is the time for me to get out. But I remained for 2 more years, and
Throughout those years, you had that conviction, right? Like it sounds like you always felt like you knew Vienna was the right thing to do, or just the timing wasn't right, or like, I mean, I'm trying to understand the kind of conflict in your head there because you had this company you're running, but you had this in the back burner, you had a lot of conviction about it.
yeah, so
How
actually,
did
it
you
was
kind of balance
everybody
that?
who was in the company from 2008 onwards, right? Who were involved with it and who knew what I
So,
was interested in would say that I just remained very doggedly thinking about that idea. So I'm very fascinated by problems. I get very bored with solutions. I don't really like solutions so much because I think they are just keep on changing, right? It's okay. But problem
yeah,
statements
you just
are very interesting. And there's something I learned in IIM, how to define a problem statement. And I just found this old supply chain finance, the problem statement that I had kind of crafted was very, very, and what was interesting to me is that through the entire period I was fallow. I was not doing anything, which is 2009 to 2015, 16. It still had not been solved. And I would say it still is not fully solved yet. So
Yeah.
in 2024. So I think, Jeff Bezos later on was, and I heard him talking about, focus on problems that don't change for the next 10 years, right? Or things that don't change for next 10 years. I
If
think
you
this
solve it, you've made a shift, right? And you've really solved something that no one else could solve.
this
Yeah.
area is
Yeah.
something that's interesting. I don't think it's going to change for a long time, the problem statement it has. So it remained. So to go back to your question, yes, it remained. And in 2017, I said, okay, finally, let me get out. And I got out in 2017. I offered all the shareholders the right to own stock in this company. Some of them accepted, some of them didn't. And then I
Mm.
got funding in initial. Again, I found, so there is an investor who I had known from 1998, who I had pitched Vayana, I think 5 or 6 times till 2017, because from 2008 to 2017 this idea was on my head, and
Yeah.
I got rejected because they said, look, you start it absolutely dedicated, and then we'll think about it. So when moment I
Okay.
created this, I went back to them, and they, amazingly, they decided to start. They gave me some funding. Series A happened then, and that's how Vayana grew. I mean, so that's how the whole journey has been. So a lot of people think about how did I think how did this idea come about? What did you do? And all. But I've been only on this idea. I mean, I'm a very boring guy. 30 years, I've only really been in transaction kind of stuff. And I only know B2B. I don't know anything else. I don't know B2C. I don't know insure tech. I don't know anything of any of the other markets. I know only this damn thing. And I'm scared that I'll get caught out one day into being something else. So
Just before we go ahead, I mean, you touched on it, but can you walk us through what exactly the problem was that you were trying to solve?
So look, I mean, it's so let me first just do a couple of quick definitions, okay? Because everybody gets very
Yeah.
confused about it.
Yeah.
So supply chain in the banking world is very simple. A large company buying from its suppliers. So all the suppliers are its supply chain, right? So everybody who
Okay.
supplies raw material to you or some kind of material to you to make the final good, they are all in supply chain. In the industrial engineering world, the way we look at it, supply chain is everything that goes right up to the customer. So it includes the distribution side of it. So the way at least we
Right.
define supply chain is right from the consumer side, right up to your smallest supplier. Everybody is your supply chain, right? Because finally, there's no point of being a company unless you can get your goods to the customer.
And you can actually deliver it. Yeah.
So
Makes
there's a
sense.
supply chain on both sides. It's
Okay.
called upstream, downstream, vendor, channel. What sort of terms? Like all other places, there's a lot of jargon. But basically that's what it is. So in that supply chain, the interesting thing is that, and this is the funny part of it. India, there's roughly about $120 billion of trade happen every month. Give or take a few billion. 120 billion. Huh? So, and there's no trade that doesn't
Mm.
happen without credit. Because
Yeah.
fundamentally it comes from credit. Now, you could argue that, look, if I have money in my balance sheet and I'm paying cash to a vendor, then where am I taking credit? But the fact is that the cash in the balance sheet is coming through some other mechanism, right? So everything happens on
Yeah.
credit. Credit is kind of I would say, very embedded into the trade itself. So this 120
But
billion
this
dollars.
is not
Hmm.
okay. This 120 billion is all the like the kind of unorganized trade that people are buying goods on credit.
No, no, no,
That's what you're
organized,
referring to, or
everything.
the
So
whole thing overall, right?
whole
Okay.
thing, right? So it actually gets in some sense magnified, because let's just assume that, let's say you are a FMCG company that sells a packet of biscuits. To your
Okay.
distributor, you'll be selling it at, let's say, 100 rupees. He will sell it down the trade for 120, and by the time it reaches you as a consumer, it's 150. Now each leg of the trade has to get financed. So actually, there are 100
Yeah.
rupees packet of biscuits. The actual financing that's gone into it might be about $450, because it's gone
Because
multiple hands,
each
right?
person got, yeah, got it, got
That's
it.
how it multiplies considerably. Obviously, it reduces on the raw material side, because somebody sells you for $50. By the time it reaches you, it might be $100, right? For you to get in their shop. But again, there's a multiple legs to it. So if you add up all this, it's a very huge business. Now the problem with supply chain is that no corporate wants to give credit, correct, or wants to pay late. If you are on the top of the totem pole, like you are the biggest business there, you really don't want to be using your balance sheet either to give credit or take credit. You want your supply chain to take it. So that's a common thing across the world, right? So everybody wants to take credit out. So there is a tremendous need for credit to be offered to everybody who's buying or selling from this large guy. So that's as simple
Okay.
as that. The
Yeah.
problem
And
is,
every industry, I mean, every industry has it in some shape or form, I think. Yeah.
there is no
Yeah.
industry, unfortunately, that's away from this problem. So everybody
Yeah.
needs credit. The top guy wants the others to take the credit. Now, the big problem really is that who can give credit? It's a bank, right? I'm just going to use bank as a word. You could switch it for NBFC or you could switch it for something else, but basically any lender. Now,
Yes, yeah,
banks like to deal with the large guy. They don't like to deal with the small guy, right? So the
makes
question,
sense. You don't want to deal with 10 people, just one person distributes it for you, right?
but the way supply chain finance is actually is that the small guy is actually the borrower, right? Because you ask him to
Yes.
give money for the credit. Now that means you have to meet him and talk to him at least and get him on board. So a lot of banks decided to focus on what I call lazy banking, right? So they would take a large corporate and work with this top 10%, 15% suppliers or distributors whom he had direct influence on or were very important to him. And he basically would tell them, Bhaiya, ye karna hai. And they would do it. So really for a bank, it turned out to be a very easy operation to do. They really had to only work with the large guy. And they didn't have to think about all these small guys. So they would do some due diligence on all the small guys, but they really didn't have to work with them because it was the large guy who was setting up the entire thing.
And based on their most important suppliers that they had a relationship with, they would just, okay, we can lend to you. Yeah. Yes.
Or the top 10-15% cream jo hai, everybody would work with them.
Hmm.
So the
Yeah,
amazing thing
makes
really,
sense.
so I used to sell supply chain finance systems to banks. So this is how I stepped into the problem, right? So I used to sell supply chain finance systems to bank in my first startup. We had international
Yeah,
clients. So before I left this company in 2007, I went and met all of these banks. And I realized that I had obviously sold it for license or whatever, I had made my money. But the fact of the matter, there's no transactions going through. So this was like I had made pipelines, but there's no water flowing through it. And that's really what set me thinking as to what's stopping it. And then I realized that all these small businesses had never even been talked to by the banks. And these
they
small
just
businesses,
can't be bothered. Like, I mean, but so it wasn't really an infrastructure problem. It wasn't that they didn't have the tech or the ability to serve it. They just didn't have like
so
the right
I,
motivation or what was.
the easiest way to understand the problem is that there was no MasterCard slash Visa equivalent of this network, right? I
Yeah,
mean,
yeah,
nobody
yeah, yeah.
fundamentally had two people, buyer and a seller. You had a bank that wanted to lend money to the small guy for buying from or selling from this large guy, but you didn't have a network that kind of brought all of them together, right? So, and there was no
Got
way
it.
of organizing it,
Understood.
and there was no common standardized way of doing it. So, and the world had grappled with it. It was not that world had not done it. I mean, back from 1970s, there was the standards of invoicing and all of that stuff, but it really not taken off. The other big problem really that most banks didn't understand is that these small guys really didn't use all the credit. It's exactly like credit cards. Like you can get 4 credit cards in a wallet, but you will probably only end up using different credit cards for different months depending on the bonus points being
Wherever
offered.
you get the offer. Yeah, 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 exactly.
So a
That's
bank was given a credit card of let's say $1 million and you use it very sparingly. Actually, the bank loses a lot of money because it has to provide for that 1 million of credit. It just keeps some margin money aside for it. So the whole thing people didn't realize is that it was not just a question of covering the supply chain, which I talked about, more than the 10-15% to the 100%. It was also making sure utilization was happening of that credit being given. And banks
okay.
really figured out that, and let's say you're an RM of a bank, right? You're a sales guy, forget everything else.
Yeah.
Finally, it boils down to just human behavior. If I'm an RM of a bank and I have got a target and I have to make my bonus and commissions, will I sell a short-term product which is for 30, 60, 90 days with very volatile
Yeah.
credit
So it's
utilization?
incentives at the end of the day. Yeah. It's just how they're not going to bother with it. Yeah, obviously.
But
That
I,
no
I'll
makes
give you
sense.
1 year loan, yeah. Simpler, I do my entire bonus one shot.
Done. Exactly.
All this nonsense.
Yeah.
And the fundamental problem is that someone has to be at the small guy to rotate it, right? Because after he's taken the first level of credit, so let's say if it's a 30-day credit cycle, 12 times you will rotate it. Now, if you don't follow up with him, he's not going to rotate 12 times. He'll probably rotate it 3 times. And you
Mm-hmm.
might rotate it at the worst time that you don't want him to rotate, which is usually season or whatever it is. So
Yeah.
all of these issues, it's fundamentally, I would say, a logistics issue. It's a distribution issue, it's a logistics issue of getting supply chain finance programs running. You really have to be at it to make sure the water is flowing down the pipeline. Second, I think the bigger issue really was the water clean, right? Because
Okay.
everybody was worried about the fact
It's a
that
good
how
point.
to, these are all not just a fraud
Yeah.
trade, right?
And it kind of spreads, right? Like, I mean, if you get into one of the wrong things, then it cascades
Yeah,
and
so
it could be.
they really needed people who understood the trade. So one of the interesting axioms of supply chain finance is that you're not financing a borrower, you're financing the trade. So it actually requires you to understand the trade very well. So one of the reasons for 30 years I've loved this business, in the last 7-8 years I've really been enjoying this every day, is that every day you learn something new about a new trade. right? You understand what makes it tick, what are the factors playing at, you take something as stupid as, not stupid, sorry, as important as, maybe not so obvious as incense sticks. It's
Okay.
got a complicated supply chain to it. Uh,
Really?
yeah.
You
And it's
think
got
there's like, well, it's one thing, like, not that many parts. How? Yeah.
in Bangkok, and I'm sure there's a lot of incense sticks flowing around there. Uh, but it's a very interesting business. People don't realize how complicated the whole trade is. Because it's, so when you start understanding a trade, then you know whether you can finance it or not. So
Okay.
I think the more I got into it, the more I realized that, look, the whole business model here and the problem definition is not really about creating pipelines. It is not even just being a MasterCard first data. It is actually being a 3PL logistics player. You have to get all of these guys into the pipeline. You have to make sure that everybody's interested in being in the pipeline, everybody's engaged in the pipeline, and they're continuously, putting in water there,
Transacting.
right? Transacting there. And that, I think,
Yeah.
is the real, if I were to call it the problem Vayana is solving, but the real big problem we are solving, and this is very kind of, I guess, antithetical to all what is said. If you really want to think about any lending, right? What is the first thing people will tell you? Oh, lending is all about collections. That's the first term people will say. First, oh, Gyani
Every
session.
time. Yes.
The guy will just shake
Yeah.
his head and he say, lending is not a feature. It's all about collections. Yeah, absolutely correct. No doubts about it. But in supply chain, it's very interesting. So supply chain is a inverted microfinance model, in my opinion, right? So in microfinance, what happens is that you get collective assurance for individual borrowing. Meaning, 10 people get together and say, yes, we know this lady,
So
we are
we lend money. Yeah.
lending
Yeah.
money to a lady for a
Exactly.
sewing machine or something, and the 10 people kind of stand as guarantors, kind of thing, right, to make sure that she returns her money. In supply chain finance, you have this large corporate, one guy, it's individual assurance for collective borrowing, correct?
Yes. It's
The
completely the opposite.
opposite.
Yeah. No, that's
Now,
interesting.
yes, but the interesting thing is that to supply chain finance, you should never be, as a lender, required to do collections. Because what are you doing actually? You're just helping that guy deleverage his balance sheet. It's a large company, you're helping him deleverage his balance sheet by moving debt from his balance sheet to the debt of his suppliers or distributors. So you're helping him in cash management. You're making everything predictable. Moment he gets an invoice from a supplier, he knows in 60 days only he has to make the payment. It doesn't matter. He doesn't have to negotiate with every one of them. Because the bank will advance the money to supplier as a loan, right? So the guy's cash flow is taking care. Similarly, if he's sending an invoice to a distributor, he knows on date zero, I'll get my money. So if I have a CFO sitting there, actually, supply chain finance is a cash management tool, right? So that is the service a lender is providing. Running the business of actually paying the money on due date or getting the money back from his distributors should remain his. And that's the interesting thing that most people don't realize in supply chain finance, that actually if you end up doing collections in supply chain finance, like a normal, any other lending you happen to do, you are actually subverting the model. The model is actually about only financing the cash part of the business, not about collecting the money. Collection should always remain the responsibility of the large guy. And the only way to do
Because
that,
they have the power to do a lot. They have a lot more levers that they can use than you do, right? I mean,
and I'll give you a simple. Whichever company you are, you've
yeah,
got some suppliers, right? Now, that
yeah,
your company has a relationship with the suppliers. Me as a lender coming, you come and tell me, boss, my suppliers, can you lend money to them? Sure, I will go and meet them probably once or talk to them on a video call or whatever it is. I have no relationship with them. I
yeah.
have a relationship with you, right? So if they don't give the money on time, what am I going to do? I'm a
You
bank.
know how likely they are to give it back on time or not,
Correct.
and who's
I'll always
where,
come back to
right? Yeah,
Mazin. I'll come back to Mazin and say, buddy, I helped you to kind of make sure you didn't have to pay on day zero. I allowed you to pay only on day 60, and I've given them credit. Now you better pay me on time. Or if I
yeah,
on the other side, I will tell you, you go and collect the money, boss. I don't care. Now the only way you
yeah,
can
right.
actually make him do that. Look, I mean, everybody say, oh, it's a large corporate. How can we force him to do that? Is that, look, if you're financing 10%, 5% of his supply chain, and you tell him the entire supply chain will get stopped financing, if even one guy
Then
is wrong, that's the power you have, the power of numbers you have. So I think, really speaking, what we figured out is that the reason why credit costs go up by a bank for small guys. So if you're running a small startup, let's say, and you go to a bank, he's obviously going to add a huge risk premium to whatever interest rate is going to charge you, right? So let's say that his base rate is 8%. he's going to add 10% to the as risk premium because he's going to be worried about who are you as a company.
And because he doesn't have that relationship directly with the individual person, right?
Context
So,
what you do.
yeah,
But
yeah,
I
yeah, yeah.
give him that context. I can say this is a small little shop in interiors of Maharashtra. That is a stockist for ITC.
Yeah.
Now, by himself, the bank would say, "Huh, I know this is a 24% kind of a interest cost candidate." But the moment I put him
But
into
if you look at
context,
the context and who their customer is and what specific product you're financing, right? It's different. Yeah.
the fact that ITC
Get
will
it.
ensure that I repays me money on time. So now the credit cost, my 10% premium suddenly comes down. So that's one very interesting way of looking at this problem, that you can actually make the interest cost for the smallest business in a supply chain come down drastically. But there's another very important reason also to do it, and I'll tell you why, and it's a very economic reason. In India,
Okay.
except a few sectors, the net margin in a business at the lower parts of the supply chain is not more than 3-4%. Okay, net
Okay.
margin. So आपने 100 रुपया बेचा तो 3-4 रुपया, 3-4 rupees is what you will make, right?
Which is a tough business. I mean, that's
And
yeah,
if I charge you 2 rupees as interest cost on it,
yeah. That's
I'm
taking more than half of your money,
small things,
right?
right? People tell
Yeah.
me, all these small guys are investing and taking more credit and investing in land. Why are they investing in land or crypto or whatever it is? Because their own business doesn't give them returns.
Because
If
they don't have a choice, right? You're making 1%, everyone else is taking everything else. Yeah, what do you do?
the idea really is that when you give financing to them, give it to them at the lowest possible rate that they can increase their business. But more importantly, just from a behavioral psychology again, if the guy needs the money for running his business every day, and it is the cheapest form of finance available, he's going to prioritize repaying it over anything else.
Because he knows that if I keep paying this,
My
I'll keep
business
getting to run my business, and it's a
is
tap, right? Yeah,
I'm not going
yeah,
to get any
yeah.
cheaper than this, so let me not spoil this one, right? In addition to the fact that the
No,
good
makes
guy who
sense.
helped facilitate this is at his neck, breathing down his neck to make sure that he's always paying. So actually, supply chain finance business, if you run it correctly, you can actually afford give really low cost financing to even the smallest business, and more importantly, not have a collections issue, or a default issue. So that's the interesting part. So why I know, and I'm really proud of this actually, is that our focus is to kind of keep the interest rates lower than 1% a month or annualized 12%. Uh, we aren't there. We
Oh,
are about
that's incredible.
99% less than 11%. We still have about 1%, which is about 11 to 14, which we have to try and bring it down to 12. But we are really trying to make sure that there is a reason why the small guys can really, grow. So I think to me, the fundamental, impact you can have is that if you really, India is a very interesting country, right? I mean, uh, just sorry, I'll just take a minute and you can edit it out later if you think it's getting too long. But there are about 60 million
No, no.
businesses in India. Nobody knows it for a
Hmm.
fact. It's an often quoted number because nobody's actually done a survey. But suppose 50-60 million. There are 12 million unique companies in the GSTN network, right?
Okay.
Out of that,
So
about
what
eight.
about
Yeah, out of that, so this 12 million are people who are in part of the formal data structure, like you can get data about them and all of that stuff.
right,
This
right,
8
right.
million, 8 out of the 12 million are all small guys, small businesses,
Oh,
right?
okay.
Yeah, in the GSTN, and the remaining 48 million that is outside GSTN are really micro and nano businesses.
They're like tiny. Yeah, yeah, yeah. Got it, got it, got
Tiny,
it.
right?
So it's yeah, yeah.
And they're all. So the interesting thing in India, if someone were to do a real survey, is that how many of a micro or a nano business becomes a small business? How many small businesses become medium sized? How many medium sized? So in the individual world, we keep saying, how do we kind of get people out of poverty? How do we get people to break the chain of poverty and all of this stuff? Similarly, in businesses, how do you make him grow? You can't make him grow unless he's willing to kind of get capital for it. And if he gets capital at an enormous cost, so one of the things I often hear people talk in panels discussions is that we have reduced the cost of borrowing for our small businesses. And if you ask them, what have you done? They said, oh, he's taking from money lender at 60% and we are giving at 25%. That's great. Thank you very much. But it doesn't solve the problem because
Yes,
you're taking
no,
2%,
exactly.
probably 50% of his total income.
Hmm.
So you use it
Right,
very
right,
smartly.
right.
So my point is that if you really want to kind of think about this problem, you want to create. So the other thing is as a startup, right? Let's just come back to slightly on our side. If I
Hmm.
charge big rates of interest, I make more money. Simple, right? If I lend out at 24% or I get my banks to lend at
You
24%, I
make more money on each transaction. Yeah,
get
absolutely.
2%,
Simple.
3%, right? So if you look at all
Yeah.
the retail loans that go out, they're all going at these high rates of interest, and that's why people who refer, act as referral guys, partners, they all make 2%, 3% of that because it's a huge spread. I
Yeah.
am telling everybody to come to 12%. So I am going to make very little money from the banks because they are already kind of giving at the almost they are at the threshold of their profitability. So I'm going to get
Yeah.
very very little small slivers of fees. And what's funny about it is that obviously investors generally will have a problem with that, saying, "Arey, ye dhanda mein to
Yeah. Why
aapne
can't you increase your rates? Of
kya
course.
chiller hunda hai?" But no, interestingly, India is nothing more than a chiller market. It doesn't matter where you start from because India has this radioactive half-life theory on spreads. So if you are making 100 basis point spreads on the first year, and next year you'll make only 50. And third year you'll make 25. Fourth year you'll make 12.5. And fifth year that guy will tell you, you pay me for giving you the business. Right? That's the way to model your business. It doesn't
Love
matter
that.
which business you are in. In India, if you really want to grow big, you have only two choices. Either you are selling something small units, exceptionally expensive, so that's some luxury item that you can really do. I mean, you just take your D2C brands, right? You will find all of them severely discounted. And every year they have to keep discounting because there are more people coming in. Every time somebody comes on some TV show, two more people jump into the business,
Right.
right? And they bring down the average rate.
And then yeah, no, exactly. So many stories like that, right? And then it just comes cheaper and cheaper. And then you're competing for keywords, your marketing costs go up, and your margins go down. You get
Whether you're
squeezed both
B2C,
sides.
whether you're B2B, it doesn't matter. In India, your fundamental assumption has to be that your margins are going to reduce by half every year from wherever they were there the previous year. So you have
No,
to
I love
really
that.
start being cost engineered startup. If you really want to be in the business, you have to really think about how are you going to cost engineer it. There is a good old joke about, no offense meant to anybody here, but, in a certain community is to sell commodities at the same price they bought it. And they would make money off the jute bag, right, in which the commodity came,
Yes.
right?
No, and
That,
that's
that is the business you have to think about, that model you have to think about. So to me, it's important that you get
that's
everybody down
amazing.
to, low rates, but you make small, but you have to have very high volumes. So, when you talked about Vayana having done 30 billion or whatever it is,
Hmm.
I do roughly about a billion a month, right? Up and down, 10%, 20% a month on month. But the fact is that I am right now at 120 billion at about less than 1% of the market. Even a 5% of it is about 6 billion, right? 6 billion, right?
Yes. Yeah, yeah.
The
No,
real
so
thing is that
there's
even if I earn one paisa, the question really is that I have quite a long, very addressable market for me to go after. And that's the only way to
it's a
look at
huge
it.
market. Yeah.
India market is a volumes market. I mean, the only people who cannot be in a volumes market are people who are selling, really branded, expensive, some, one of those lifestyle kind of businesses. Some golf course where nobody else can come in and stuff like that. I mean, those kind of businesses
Right.
have a per unit price. So every time I talk to people, I say any business is a standard formula, right? A into B, number of units sold and unit price. In India, unit price you would assume is very low. So the only choice is to increase the number of units if you want to make absolute amounts of money. So I think that's the only model. So I think Vayana, really speaking, I think three problems we have solved or we are solving. I think one is coverage. We get lots of the supply chain covered. Two is
Okay.
that we have increased the utilization rates, and I'll come back to how we did that. And third is that we have helped it to kind of really be affordable. And therefore, if because it's affordable, it also solves the utilization problem because people use more of that because it's probably the cheapest, right? But last point I just want to make, is the technology part.
Okay.
So obviously
If
we
you
have,
can't scale and you can't do volumes without tech, there's no way. You can't do everything
yeah,
manually
but
if you want to
mainly
get
it's
that.
hygiene. Honestly speaking, Mazin, it's hygiene. I mean, I really, this fintech word, techfin word, I just find it silly because, and I've always found it silly, not because it's now called silly, but look, I mean, without tech, unless you were a business that started before the 80s, I mean, there's no business in this world that doesn't run without tech. Yeah, I mean,
Yeah,
what
that's true.
I mean, there's no business that runs without tech. So let's leave the tech part out for a business. So if you want to call it fintech, then you may want to call it, Kirana tech, and everything is a tech, right?
And you keep going. Kirana tech is a thing, though. I've heard people say that. So,
And second, the moment you say
yeah.
fintech, now, and what are you? Fin means what? Financial services. Then you should be a regulated player. If you're not in financial services, what is enabler? Then you're a DSA. I mean, तो आप I mean, it's a fancy words हो गए हैं. The fact of a tech is right. The interesting thing for me as Vayana when we started it, right? I just thought, what are we going to become? We are going to become intermediary. Uh, Look, I mean, we can keep calling also all our fancy terms. Like ultimately, I'm an intermediary. What are we doing? We're saying
Yeah,
you can.
because there's a lender and then there's a customer and you're in the middle. I mean, at the end of the day, yeah, that's
I'm actually adding one more friction, which was not there before. There is a friction point because if you went directly to the bank, there is
that's true.
so every one of us is a friction point. We don't realize it. We are a friction point. Now we can say we are enablers. Our tech makes it much more easier. Blah blah blah.
Wow, that's
Nonsense.
that's old. What?
All intermediaries. The question really I had in Vayana when we started off is that do we want to be a visible intermediary or an invisible intermediary? Right? And the only way
Yeah.
we figure out that is that if we wanted someone to use us, we had to be invisible. We couldn't really go into somebody's house, knock on somebody's door, and say we want to be invited inside and we want to kind of map out your house and be part of your household. Only then we can help you. It won't work. So we had to,
Yeah.
we didn't even have to come to your house and somehow managed to do it, right? So all of our tech, very interestingly, has actually tried to figure out how do we become invisible. It is not something I can say we have been 100% successful. And every day we fight because, every technologist who comes wants to set up an app and a URL and some fancy stuff. You can't, everybody needs something to identify with, even within Vayana, I guess. There's a urge. The fact of the matter is that the guy who's using you doesn't care a shit about you, right? I mean,
It doesn't matter. You might not even.
He wants to get money cheap. You helped him, thank you very much. He will take one agarbatti and put on your frame and maybe do twice in the morning. But that's all he wants to do out of you. Right? I mean, he really doesn't want to. He doesn't want
Absolutely.
life. So the best thing for you to do is to give him what he wants and stay silent about it. There is no other, and that actually is an incredible, I think important thing. Now people talk about embedded finance, right? And I think it's a good term. I mean, I have no objections to the term, but I just think you have to be embedded. There's no other choice because you not only embedded, you also have to make it without thinking about it, right?
I mean, that's like it's just a new term, but it's what you've been doing for years and years, essentially.
I really like the card. I spent a lot of time in the credit card world, even from my first startup. And one of the things that struck me about credit card is two things, right? What you realize, anywhere in the world, it works the same way. Pretty much the same way. I mean, India में एक और दो step ज़्यादा बढ़ता है कभी-कभी, लेकिन overall everywhere.
Yeah, but it's the same thing. At the end of the day, yeah.
All of us, it is muscle memory. We don't think about credit card at all when we are paying. I mean, we think we are doing a payment. We are actually taking a loan.
Yeah, but it's just so automatic that it seems natural, right? Like you don't even think about it.
Says, I am taking a loan to pay this card. When I'm giving a credit card, in my head, there is nothing going on. I'm taking a loan. I'm just thinking I'm paying.
Not at all. Yes, exactly.
Payment mechanism, which is silly because it's actually a fraud mechanism. Unless it's a credit card or it's a charge card, right?
Right. It's you're taking a loan at that point in time. Yeah.
One factor, the experience, is that you don't require to really think about it when you're using it. So you really have to. So to me, that was the lesson I took from supply chain finance world. That if someone has got multiple invoices going on in a day, he has to. You take an auto component guy. Simple example, right? If you are an auto component guy, you're servicing 3 or 4 large guys. You're servicing a Bajaj, Auto, Tata Motors, Maruti, blah blah.
Right.
Each of them will bring his own set of banks and tell you this is the way you will run supply chain finance, and this is how you will send us data, and this is how you will,
nightmare for this small company that maybe has like 2 people working in IT. Yeah.
In a lot of small companies, there's no IT at all. So you really have to think about how do I get this guy onboarded without even having to worry about what new. It's like your software today. I had to suddenly learn how to download Chrome, right? Which I don't allow Google on my laptop. I had to do it today for you guys. But view.
Thank you. Appreciate.
But the point is that it made me think. And I had to do some stuff. And for a small business, the biggest bandwidth issue he has is time. If you ever go to a grocery shop, you will find that he is doing from 7 in the morning to 10 at night and is busy.
He doesn't constantly something or the other.
He's an interrupt-driven guy. He's got 25 different things going on. In midst of that, you're going to tell him, look, I've downloaded an app on your phone and, this is in the 4th window. And every time you want something, you click on this app. It's a beautiful app. It'll open up to a page where you will get a pie chart of all the current business you're doing and you'll rotate. Red color will tell you what you want to know. Click here and then you will be able to upload invoice and make sure it is not blurry and it is not on a shiny surface. And then later on, you take photos of the days, and then you upload it. Oops, the
Yeah.
internet is not working. You have to do it
Oh.
again, and you cannot solve the problem
No, I
again.
get it. Yeah,
So
no.
I think a lot of this is just basic common sense. You don't need tech thinking like anything else. You just have to sit in front of a customer and realize one day you spend with him, and you realize what you really have to solve for. You have to solve for getting out
Simple
of.
solutions, like you
You have to solve for getting out of his
said
life.
long term hack.
I think
Right. Right, exactly.
most
Be
startups don't
invisible and
understand that their purpose in life is to get out of their customer's life. I mean, that
yeah.
if most
No,
startups work
that's
that way, I think that will be a great place to work with. The number of apps I have on my phone is ludicrous. Yeah, every Tom, Dick, and Harry has an app because he thinks he's doing something for me. So I just think so. That's my sorry. And now long rant over. Now you can continue with the rest of your question, Mazin. I'm sorry. I kind of used all your bandwidth on this one.
this was a lot of fun. Thank you so much. And I'd like a couple of things. So I want to come back to the question that you gave me at the start, right? Which is, do you still think that you're a good fit for your current role? And maybe you need to preface that by explaining how your role has changed over the years. And right now, are you still a good fit? And how have you had to evolve to stay there?
Look, I mean, it's the reason I told you to ask that question is that's a question I do ask myself. Where and the reason for that is Vayana is a very interesting structure. So Vayana, the best way to look at Vayana for someone looking at it from outside is it's like a train, right? It's a train with a very fixed destination and running on very predefined tracks. So it looks
Okay.
like an organized train. Now, but Vayana is composed as a train is composed of many compartments. So one of the things that we realized long back, I told you, credit is a logistics game. When you want to do supply chain financing, it's a logistics game. So you have to do not just
Okay.
finance. You can't just say I'm in underwriting and I'm giving credit or I'm a platform. You have to do many things to get that credit available to people, right? So I have to do credit assessment. I have to get into compliance. It is not because I am opening up many avenues for revenue and I want to kind of stitch together. It is that to get credit, I have to do 5 different things to get into credit. So if you take a company like
Understand.
Flexport and look at the internet history of the menus of Flexport website, you will find that they have also had to build like a logistics player, multiple things to get to where they are now. Right? They can be asset light. They may have to be little in some areas asset heavy. Some areas they have to kind of get into being just information providers. Some areas they
Yeah.
have to platform, blah blah blah. So Vayana is really like a train with many compartments. My job is two things only. One, to keep the train running on the tracks, not derail it, get it to that point.
Okay.
And second is to make sure all these compartments have a vestibule going between them so that people can freely move between the compartments. But each compartment can
Correct.
have its culture. So I'm a very big believer of not being good about monocultures. I don't think there is in nature a monoculture, and then we'll all be dead. Um, you know, uh, I think every company, irrespective of what it talks about values, mission, vision, and all that, has multiple cultures. Even if you take a company like Apple, you take anybody, even if you take Nvidia, the latest darling, I'm sure within different
Right.
departments they have different cultures because they're very different businesses. The guy
Right.
who's
Right. And different.
he's going to be very, very organized, very systematic. He has to be. I mean, he has got to be a guy paying attention to the absolute nth level of detail. The guy who's thinking about design
Makes
is in
sense.
a different business, right? So you can't be one culture. I mean, it doesn't. It beggars belief. So you really, as today, my role is to make sure every compartment is properly meshing in. Every compartment can really go full. I be successful, and everybody who is in each compartment, I make them successful. So I think in that role, I'm very, very good. I think the question that really needs to get asked is that as it moves into more and more and more into execution, and you want to make this passenger train into Vande Bharat to bullet train, then what do you need? And I think I really will have to learn a lot of tricks to make it a bullet train. I don't think
Yeah.
I'm equipped at this point in time to be a bullet train engine driver. I really need to kind of either learn or give up, two choices. And I think that's one area I keep on thinking about, because I see very quickly Vayana becoming a bullet train. It is
Okay.
performing well. It should become a bullet train from Vande Bharat. 160 kilometers, it has to go to 320 kilometers per hour. But it has when it gets there, it has to
Still
get
2x. Right.
different skill sets. So
Makes sense. Okay.
yeah, so, am I a good MiG 21 pilot? Yes. Am I a good Sukhoi fighter? I might learn now. But a complete autonomous fly-by-wire plane, I have to learn.
Different thing, right? Different journey and different Very
I love
different
this business.
explanation.
Look, somebody will have to drag me out of this business, but I think from a coach point of view, I think what I have to prove to them is that I've developed the skills to run it that way. If I haven't, then they have to find someone else. But I think it's very important for founders to ask this because everybody talks about the 0 to 1, 1 to 100. This is a good framework. Look, there was some question I saw in your sheet that said consultants, what are they good at, what are they bad at, right? So consultants are allowed
Yes.
just 2 by 2 matrices, right? कुछ भी करो एक x and y एक्सेस डाल देंगे, चार डब्बे में डाल देंगे सबको. ये 0 to 1
Yes.
construct. The fundamental point is that if you map out your startup's journey, you may be only good for 0 to 0.25 or from 1 to 10. You may not be good for 1 to 100. 1 to 100 is a huge range, buddy. So,
No, exactly. Everyone can't do everything. And I think knowing what you can and can't do is
I think
is
that's
the
very
first step,
important. So I
right?
think to me it's a question you have to ask yourself every day. The screensaver of my laptop right now, which is very important to me, is the problem statement we are trying to solve. Every day I have to figure out is it still relevant today. Because one of the worries you always have as a startup founder is not the solution. The solution can be crappy, and you have time to fix it, and you can try and fix it. But if you
Absolutely.
misunderstood the problem, nobody can save you, right? So I have to really every day look at this problem statement that comes up on my screensaver when I'm not doing anything and figure out back of my head. I have to think about, भैया ये आज भी relevant है कि मैं कुछ तो I'm living in my own prior definition of it. So I think that's the key thing. But similarly, I have to ask myself the question: am I the right engine driver for this train? Depending on what speed I want.
No, I love that analogy. And just to wrap up, you've given us many pieces of unfiltered advice and many insights. But since this is a question we ask all our guests, what is some unfiltered feedback that you received that really impacted you personally or professionally?
So actually three I got. So I'm going to tell you all the three, and they have stuck with me for a long time. So very first one I got in my B school by a friend of mine when I was doing a project with him is that I was as usual marveling some fatte, and he said, "Yaar, Iyer, you can fool anybody else you want, but never try and fool yourself because that will be dangerous." And it stuck with me. Like one of those things, said, informally or casually, but that
Just
remains.
random thing someone said.
Yeah, so it just
Yeah,
stuck with
no,
me,
I
right?
like.
That's like a very, very big thing that I look. I think second, someone told me that my co-founder again in my one of my startups told me that look, you get very engrossed with the intellectual problem definition side of it. You really are not so interested in whether it's really successful or not, because I keep telling I'm interested in the problem, not the solution. So he always said, if you really want to do something, you do it at scale in India, otherwise don't do it. And that struck me.
Yeah.
So to me, scale is a very important metric of whether my understanding is correct or not. It is not just a scale
No, and
from a
you've set
vanity.
up
Yeah, so it
you
just has
you
to.
set up your business that way, I think. I loved how you spoke about the importance of having low margins so that you really are built for scale, right? Not just making as much as you can on day one. And
So that's all come only from
that's
my third
amazing.
startup. My first two startups were not there. My first two startups really, without that feedback, I probably would have still continued building a very, I think, admired, liked business, but never scaled
Yeah,
up. Right? It would have been
right,
one of the boutique
right.
businesses. So I think that second feedback that I got in was very, very important. Uh, and third thing I think someone said, which I think is not their quote or their advice, but it is that don't let people mistake your niceness for weakness. Uh, I'm a very conflict avoiding person. I don't like conflicts. I don't really like getting personal at any level with any conversation. And a lot of people mistake it sometimes for, especially in a startup hustle environment where there is a lot of adrenaline flowing, that this is too soft. You have to have a few swear words, and you have to have some whatever you have to do, some testosterone flowing, I guess. And I just find it
Hey,
silly.
that's it.
I keep telling people I'm not running a nursery school. I don't need to kind of shout at people. Yeah. But the fact is that I think the con of it is also true. You have to make sure you people understand you for what you're standing for, and that they don't kind of assume that you're nice just because you're weak. You're nice because you think that's the right way of doing business. I think that was an important piece of advice for me, because I just assumed people would just treat niceness as niceness and nothing more than that. But I think it's important. It's important to kind of be nice. I really, so we have three things that I am very emphatic about in the company. Be nice, be yourself, and be curious. Right. So be yourself is very, very important to me. I find it very scary when people try to be things they are not truly are, because then it's like people who will always cause accidents.
Amazing, Ram. Thank you so much. It's been amazing. Really has been a pleasure. Thank you so much for your time and for joining us on the show.
Hey, thanks. Yeah, sorry, it's taken really long. Yeah, it's 90 minutes down. Yeah.
No, 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 no. It was a pleasure. Learned a lot, and we laughed a lot, and I had a great Sunday. So thank you so much for spending time with us.